Nigeria's 2025 tax reform, a law meant to fix our economy, increase government revenue, and make things fairer.
But the question is, will it really help the people or will it just make life harder for the ordinary Nigerian? Let's break it down simply. What this new tax means for you, me, businesses, and the future of the economy. 2025 is a turning point for Nigerian fiscal policy. What is this fiscal policy? Fiscal policy is one of the ways the government runs or regulates the economy. Basically, there are two major ways the government regulates the economy, either through monetary policy or fiscal policy. Fiscal policy refers to how a government uses its spending and taxation to influence a country's economy. While monetary policy is the use of banking regulation to either expand or contract the economy. Let me explain how it works. There are three types of fiscal policies: expansionary, contractionary, and neutral fiscal policy. In expansionary fiscal policy, the government boosts economic growth during slowdown or recession. And this is how it works. The government increased spending in infrastructure, education, jobs, etc., and reduce tax to increase people's disposable income. They can also encourage businesses to invest and consumers to spend more. For example, during economic crisis, the government built roads, pay contractors, and cut tax to stimulate demand. On the other hand, contractionary fiscal policy is the opposite of expansionary fiscal policy. In this case, the government slows down an overheating economy or reduce inflation. This is how it works. The government reduce spending, cut public projects or subsidy, and increase tax to reduce excess money circulation. The last fiscal policy is the neutral fiscal policy.
In this case, the government tries to maintain a balance between taxation and expenditure.
The government revenue is roughly equal to expenditure. This fiscal policy is used when the economy is stable and doesn't need intervention. But that's not the case in Nigeria. It's disappointing to see our government spend more than it earns, completely going against the principles of contractionary fiscal policy. How do you raise tax, remove subsidy, and still fail to reduce government spending? It's even worse that most of this expenditure go into recurrent